understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
We are back with another episode of the Tech Behind FinTech. Really exciting and interesting show today. Joining me is my guest, Nikolaus Sühr. Nikolaus, how are you today?
I'm very good. Thank you so much for having me.
Excellent. Before we jump into the topic and a few things, we just have to do some basic housekeeping. We are streaming live from Facebook, LinkedIn, YouTube, Twitch, and we also have a stream going from Instagram. Just wave to a friend of mine, Gabe, on Instagram. So today's topic, the fusion of finance and coverage, mastering embedded insurance. So before I get into the topic of the show, I want to read my guest bio, and then we're going to dive into it because it's a topic that I became a little bit fascinated with after Nick brought it to my attention. CEO and co-founder of KASKO since 2015. Before that, Nick worked in the family insurance business, commercial insurance, and strategy consulting. He's a proud husband and father of two beautiful daughters and loves to try and find ways to create insurance solutions that work.
It's true. Yeah, that's me.
I like it. It's a very, very straightforward bio. So, I mean, Nick, I think the question, right, and we're going to go into your background in insurance.
Sure.
What is embedded insurance?
Okay, so, and in my neck of the woods, there's actually an interesting definition discussion about what it is. I'll give you the broader definition of what I think embedded insurance is. So embedded insurance ultimately is offering a relevant insurance product within someone else's, let's say, customer journey. So it's basically non-insurance brands or platforms integrating insurance services into their customer journeys and service offerings so that the insurance is not primarily bought, it's kind of bought alongside of something. So, and this is not new. So, travel insurance when you buy an airline ticket is one. But it can also be, buying home insurance at a digital bank, or it could be Uber organizing sick leave insurance for their Uber drivers to improve their experience. So it's quite multifaceted.
It's interesting. I mean, look, with that definition, I'm going to Money 2020 in Vegas, huge conference, right? Super Bowl of FinTech stuff. Booking my ticket. Then, I had the option on my ticket journey to say, okay, do I want travel insurance?
Yeah.
I'm not flying. It's not an international trip for us. It's pretty domestic. I opted not to get the insurance, but that's an example of embedded insurance.
That's an example. And, people would say, that might be affinity or just partnership distribution because it's been around the block. Even if you go way back, putting travel insurance on your Amex card to encourage you to book all your travel insurance purchases on the Amex card so they make money on the interchange is also within my definition of embedded insurance. It doesn't always have to be super technical or API driven. However, these technological advances have made more custom, more tailored, and more kind of high frequency products that have some form of interaction with the customer more feasible than you would have 10 years ago. So embedded insurance is it's not really a new concept. And I would encourage anyone who wants to drive change in the insurance industry. We've been around for a while. Insurance is not a new thing. So trying to improve things that have already proven that there is a demand for it has proven a much better route to business success than trying to disrupt or change or, shake someone into changing their behavior. So I like things that have already improvement, just injecting technology to make them better.
All right, so I mean, so let's follow that thread, right? So what you're saying is, I mean, from the insurance side of things, total disruption. Have you seen case studies where like a total disruptor works?
No,
You're seeing
not a single one. So if I've been socialized within the insurtech space since I remember when it was discussed whether it's instech or insurtech. So 2015 is when the hype started, and billions have been invested into the insurtechs, and there just hasn't been a disruption. And I would argue it has to do with the customer ultimately not interacting often enough with the product for thankfully, because otherwise everyone would have insurance claims, so that it just takes a while to re-educate. Almost, it's almost like a generational shift, which is why moving fast and breaking things just doesn't really create value. You need to be in it for the marathon, and I think that's what we're gearing up for in the next wave of insurtech, where it's about enabling, being in it for the long run, rather than trying to outcompete your Allstate or Allianz at their own game.
so in it for the long run, different phase of insurance. What was the first phase of insurtech? Are you saying that that was like around 2015 when you started?
So I think, and this is not exactly the same thing. So the playbook played out slightly differently in the US and in Asia than in Europe, and I'm kind of looking at it from a European perspective. But really, the first wave was kind of, we're going to own distribution, right? So you had digital brokerages coming up and will say, no one wants to deal with that advisor, paper-based, they don't add value. Here's a slick app, do it yourself. That has somehow worked, but it hasn't really worked, because ultimately, I think what people realized is that from a customer perspective, interacting with a product that is really complex and infrequent, for better or worse, outsourcing you deal with this is actually very convenient, and more convenient than a digital self-service portal, right? But that was kind of the first phase, distribution. Now, the second phase then kind of came afterwards, and that is when your Lemonade, Hippos, it's like, okay, we'll now become our own insurance company. Insurance, okay, got it, the distribution is what it is, but insurance is so, it's so analog, and these guys are so old. It's usually guys working in insurance companies, is so old, and we'll just inject technology and we'll just outcompete them. And what you found, and we're going to have better pricing models, there hasn't really been any benefit in pricing aside from cyber insurance, where some of the stuff is really cool. What people have come, active cyber is an exception, but usually Lemonade does not price risk better than Allstate. They don't. It's just marketing stuff. And they're not marketing it better than Geico either. They don't have better customer acquisition costs than Geico. So, they've none in their journey. They have great marketing presentation, but they don't outcompete with them that well. And again, I think it has to do with and it doesn't mean that they don't run on a better stack. It's just the extra effort in order to invest, in order to gain trust, is just higher than any operational gain you'll have. Because what people miss is you have all these really big numbers within insurance, $1 trillion a year, but that is not the same as SaaS revenue or finance. It's not even the same as financing revenue or payments or loan book, because depending on your line of business, 30 to 80% or 70% is paid out in claims. You're just a custodian of someone else, and that you cannot optimize. The rest really goes to distribution, which is another 30 to 30, 20, 10 to 30%, you can also not optimize that. So you're really just left with a sliver of 10% on admin costs. And that's not that much then all of a sudden to optimize, especially since you don't have that many interactions like you would with a digital bank. And so most of these insurance companies have massive write-downs, valuations been corrected. And what you'll see now is more of a kind of enabling. Some people are big enough and they're staying, but it's kind of going, okay, maybe we're not going to win this in the next 5 years. Maybe we'll just establish this over the long term. And that's kind of the third phase now, where actually incumbent insurers are starting picking up some of these insurtechs at a good price, or they're picking up talent, and they're realizing that there has been something created. And embedded insurance is a perfect example of this, to kind of segue back into that, to say, we've absolutely have better ways to create products, to integrate them, to create customer value, especially if you can do this on someone else's, let's say, already existing trust, because trust is hard to come by.
So, I mean, in looking at the comparison, right? So we take FinTech, for instance.
Mm-hmm.
We have incumbent traditional legacy banks partnering, acquiring FinTechs to advance their technology, and to add new features and benefits to their customer base. Sounds similar in InsurTech. I mean,
it is
in the insurance side, right?
It is similar. And I would say for insurers, because the insurance is so much more infrequent. I mean, if you're looking at it, life insurance, most customers never experience the product. Even if you buy it, you maybe buy it once. So yeah, you hate the process. But what are you going to do? Are you going to go through a slick app, or are you going to go to, that dude from Allianz, and they have a big brand and they've won, they've just been through 2 world wars and they're still there and kicking. And, when it kind of comes to that, who cares? You're going to do this once in your life. And that is different than having a trading app, which I might engage with every day. So I'll just say FinTech has more touch points to convince customers that customer friction sucks. Insurers have high customer friction. It's just not big enough to overcome the lack of trust of these new competitors, which is why you see more collaboration now.
And another point that you brought up, that it's more customer driven. So the nuances and the different the ways that it's not necessarily disrupting, it's not based on the technology. It's not based on this new slick product. It's really based on the end user just saying, you know what, we don't want it. We're good. We're happy.
Yeah, I mean, it's like, it's not great, but yeah,
exactly.
it's not,
Exactly.
yeah, it sucks, but come on, I'm not going to do this often.
Mm-hmm.
And then you're just kind of going, and I don't really know, and it's complex. What's a good product? And maybe then you're just going to go, okay, it might not be the best product, but probably, I don't know, I'm making this up. Allstate, they're probably going to pay, or Geico, they're probably going to. I don't really know about this other company. I just don't know, or that you have an advisor who and who you then trust, who's like, okay, Bill probably knows. And so I think that is what people have, me included, by the way, have had to learn the hard way, that is truly convenient. Insurance is a product that you ultimately, ideally, never consume. And so it has to be with trust. You have to trust someone. No one really, there's not that many people who went through that process who can talk about it, luckily. Right? Because they're so infrequent. And so that being able to trust someone, and that can be through a relationship that you have with someone working in an insurance agency or broker or company, or someone's brand, or because your parents shopped there, it just makes that entire purchase experience a lot easier. The submission process still sucks largely, but it's because it just doesn't matter that much.
You know what? That is the first time that I've heard it put that way. you're buying a product that most likely you're never going to experience. I mean, yeah, pretty much, right? So the trust factor in that extremely high, because we all know the horror stories of people having insurance and then all of a sudden something happens and then they go, you know what? This dotted line right here is subtitle A-1BC. We don't pay out for that. You're like, what? So recently, right, on for me, I had a real situation that happened, right? I do some real estate investing. Had a home. It was no one's living there, so it was under construction. We finished it now, but we had a break-in, totally took all of our stuff, right? We just so
sorry to hear that. That's horrible. It's horrible.
No, it was extremely horrible. So I'm like, okay, cool. You know what? Light bulb moment. I have insurance. So I call the company and they bring the adjuster over and they get back to me. Yeah, for construction insurance, we don't cover theft. You're like, oh, okay. You didn't tell me that when I was signing up for it. Right? So
no, and I'm not saying this is. I'm not saying that. What I'm saying is that wouldn't have been fixed with the digital application journey either, or it wouldn't have been fixed with a great app. You phoned someone because you wanted to. You're in a distressed situation. You wanted someone on the phone, not some semi-working chatbot. That's what I mean. That's why I'm not saying that is a great experience. It isn't, but that's why technology to date and these slick apps and great tech stack have not managed to significantly shift customers away from their existing purchasing preferences.
And that's a really interesting point, because when you go through something like that, I mean, it's a material thing, right? We ended up resolving it. The end of the story is everything worked out at the end, right? We built it, everything's cool, we're gonna exit soon. But the interaction part, right? When you're at those types of moments, you do not want to talk to an AI chatbot. That is the one time I know AI is like, cool, look, I'm into it too. I do not want to. I hate interacting with it just for basic customer service stuff. I'm like, oh my God, let me speak to an operator, please. So, but when you're now in a situation where you're dealing with life, property, health, I don't want to go back and forth. I don't care how good the large language model is. I don't want to go back and forth with you. I want to speak to a human being.
Exactly. And, this might be different if you have a broken mobile phone or cell phone. You'd say, I want that digital submission. That's easy. I don't need to call someone. So it also is different by the type of claim that you have. And another kind of peculiar thing about insurance is the better the experience for you in terms of getting paid, because there's also sometimes a gray area, right? Sometimes it depends. But the better the experience for you, the more people experience it, the worse it is for everyone else on the same insurance program. Because ultimately, the more claims are submitted, the more expensive the insurance becomes. That's what you see in Florida right now, when no one can buy insurance anymore because claims are hitting. And so ultimately, and I've had a discussion with a friend recently. It's like, who is really your customer? I would argue it's not, as an insurance company, it's not the individual customer that is your actual customer. It's the portfolio. You're like a custodian, and you kind of need to manage the group. And by managing the group, you need to have that dotted line, not to screw you over, but to price it adequately, because otherwise people would get paid more than they would have paid into the pot, assuming an insurance company that is a reasonably efficiency run and where shareholders don't extract massive amounts of shareholder profits as dividends, right? And I think that's so it's slightly different experience. It's like almost negative network economies, but that, I think, is why insurance is so beautiful, and that fundamentally also doesn't change with embedded insurance. So the core product of insurance does not change with embedded insurance. However, a few things do change. So embedded insurance, kind of come back is you're selling something through a big platform. Think big neobank or big brand retailer or big airline, just for the sake of argument. So what changes? A couple of things change. One, your distribution model changes. As more and more customers are being aggregated into these larger and larger platforms, the more purchasing power is aggregated and within these platforms. So for insurance companies who usually have been the senior partner, they're the big guys selling through lots and lots of smaller agents. This now slightly reverses because they're now the junior or maybe eye-to-eye partner in a partnership. They're not the senior partner anymore. Also, for these large platforms, maximizing insurance revenue or commission revenue might not even be their primary objective. So let's take Uber does not want to offer, let's say, sickness insurance for Uber drivers and maximize commission on that product. What they want is to create a product so they can attract more Uber drivers on their core platform. They're just looking at the supply side of the platform. They don't give two shits about making money on the insurance. It's something to improve customer loyalty, or in this case, supplier loyalty or churn. And so what that means is you need to, and this could be different to Lyft. Lyft might want to monetize on their drivers. Just because they're direct competitors, this could be different. So what you then need to, so that's one thing, and I'll go what that means. But ultimately, you now need to kind of co-design these products with your distribution partner because you don't know, and this can change. The second thing is then that leads
stop right there, Nick.
Sorry.
Explain the co-design process.
Okay.
Because
so
when you talk about embedded insurance, we're thinking that, I have this pre-built product, right? I'm going to find a distribution partner, whether it's Uber, Orbitz, whatever, right? And then I'm gonna put this in. But now what you're saying, because that was how I was thinking. But now you're saying it's more of a partnership, and we're going to build this out together.
Oh, totally. Okay, let's take the airline example. So sure, insurers have ready-made travel insurance products in different configurations, right? Now, but let's say, and the airline says, maybe I like travel, but really, for example, I need a COVID protection. And maybe the insurer already has COVID protection, or maybe they now have to build it. Or they'll say, what about flight delay insurance, luggage delay, good weather? Or what about I actually want to have a flex ticket insurance. So there could be different elements around it that an airline might want to look at in their program. And at that point, the insurer, not just on the coverage level, but the entire process, needs to design that process. Or some airlines just go trip-based. Other airlines say, okay, actually, I want to get recurring revenue. So maybe I'm now also looking to offer to some of my customers a multi-trip insurance product. So now let's work through the customer journey of where that is being presented. Is that part of my frequent flyer package at a top up automatically submitted, or is that through a mail campaign, or do we need to do outbound calls? So you now need to co-design the entire product and customer kind of journey with your partner. Who does the calling? Is that the call center of the airline? Do they have the regulatory licenses to do so? So it's just more, I would say it's a blend. You don't, as an insurance company, don't go with a white sheet of paper and say, what do you like? Because that's your business. The airline is not in an insurance business. They don't care. They have some objectives, but it's very much a co-design part. And you might actually, we know from a leading embedded insurer that ultimately had to create a product per customer, per distribution partner.
That sounds expensive.
If you run it on a legacy tech stack, or even a modern where it costs you 400, 500,000 euros, dollars, you name it, to configure a product, sure. So you need to drive those costs down. That's one of the key things on the technology side. You need to be able to be within embedded insurance. You need to be able to drive down the cost of designing a product to your customer specification massively. You do not need that in a normal line of business, because your agents do not want to have a different, they kind of want a stable product as well. They don't want a product change every day, because then they need to remember that. But so that's the co-design part. Now that leads into commercial. So some distribution partners, some platforms might not actually want to make money on insurance. They just want it. Share economy is an example. I'm pretty sure, Airbnb, that guarantee that if someone breaks your apartment that you sublet, even though you don't have a normal landlord insurance, they're not making money on that. You just needed to further their product, their service. Or they might want to play around with how much revenue they're making. But ultimately, the key thing is you have someone else in the room that is constantly monitoring your margin as an insurance company, and they might initiate a tender 2-3 years down the line. So it's very key for an insurance company to be lean in your cost base, plus being able to aggregate your own more and more products to improve switching costs. Because once they easily, and here, that API technology, that great microservice, that is also, it's easy to get in, but it also removes a moat. Because now someone else comes with an API and they just switch really easily. So you really need to, you really need to up your game and ensure that you are constantly making it hard for your distribution partner to leave you. Because previously, when you had a bank and insurance partnership of 10 years, exclusive arrangement, people were plowing in millions, everything sucked, but at least you knew you had your business partner, on your side.
No, question for you. Regulatory. In insurance is a highly regulated, FinTech, finance, highly regulated industry, right? How does that work with embedded insurance?
Sure.
And working with these partners?
So, and I'm giving you the European spiel. It'll be probably similar to the US, with the US having the complexity that you have state by state regulation. So we actually have a more unified regulatory insurance environment in the entirety of Europe than you have in the United States, because of that local regulatory setup. But that aside, ultimately, you kind of start with, it depends on the type of product and how it's being sold. So there is a thing called connected contracts or connected insurance. That means you connect travel insurance to a travel purchase, mobile phone insurance to a mobile phone. But it could also be I believe, I'm not actually sure, I will have to talk. I think it could even be and it can also be a car insurance to a car purchase or something. I'm not entirely sure about life insurance and mortgages, etc. But ultimately, if it's directly connected to a core product like that, to a certain limit, and you cannot buy it standalone, then you have an exemption from regulation to kind of make that easier. Then otherwise, you need, as the platform, get your own regulatory status. That's kind of option 1, connected contracts. Option 2, you become your own regulated intermediary, either a broker or an agent, and thus have to fulfill the regulatory requirements. They're reasonably light touch, but you need to have an approved person that follows you basically need to have someone in charge who figures out that you're following insurance distribution regulation, informing your customer about stuff, etc. It's also reasonably light touch, but usually you need to kind of set that up. And depending on where you're regulated, you're now under the regulatory purview of your friends at the insurance regulator. And not everyone loves that. I mean, it's probably different than running a restaurant, I would imagine. The third thing is you can just become an introducer. So you just kind of have a link out, or, there's certain restrictions about what you can't really embed it well. It's more like affiliate marketing. The fourth one is you're not actually a distribution partner, you're actually the policyholder. So let's say Amex is not a distributor of travel insurance when they put Amex travel insurance on their credit cards. They're actually the policyholder. And for that, they don't need to. And you're just part of an insurance group. And then you don't need to have any regulation. And you can, depending on the legislation, where you can kind of stretch that to try to circumvent certain regulatory oversight. But regulators are clamping down on that.
Can you help me out with this, just so we could understand the terminology for those of us who are not familiar?
Of course, sorry, and apologies for that.
No, I don't need to apologize. So what's the difference between now the policyholder, like the Amex example, right? Amex, you can get they have the traveler's insurance,
sure.
You use your platinum card. What's
policyholder is the customer. So you as the customer, policyholder is the insured person, aka customer. It's the same. So Amex is the customer of the insurance company, and they're saying, I'm insuring all my credit cards, and you as the Amex card holder do not engage in a contractual relationship with you and with the insurance company and Amex as an intermediary. You are just joining Amex's own group insurance product that you can join by becoming an Amex member. That's why they're called group insurance products. Or it's similar, you sometimes have that in the employee benefits context, right? It's a similar principle. You have an accident insurance and the employer takes out an insurance, and then you as an employee join that insurance program. You do not have a direct relationship. You're not the customer of the insurance company. You're just an insured person, and the customer is actually the employer. That's
got it. Because we talk a lot about security on this platform. My background is security, so I always try to get the security questions. There's also Cybersecurity Awareness Month in October. I have to throw that out there. But we're dealing with now two different technologies, two different firms partnering together to embed a particular technology on somebody else's platform. As we always say, you're only as strong as your weakest link. How does that process work in terms of ensuring the security of the technology?
Sure.
And so forth?
I mean, usually there's kind of three ways of how data is being shared. One is, it's called local replication. So an airline would probably implement a lot of the pricing variables locally in their front end because of speed, etc. So they would get a pricing table and the documents and implement that locally. And then once they have a sale, they would then send that as a batch or single file upload to some form of secure connection. I don't know, could be a secure SFTP upload server, because it doesn't, it's fine. The insurance company doesn't need to know immediately, because you're not going to claim immediately. That's kind of the traditional way, and it still works, and it has the benefit of that the platform kind of has full control over it. The more elegant way is obviously through an API that is being delivered by the insurance company or their tech team. So you'll send them, get price, bind policy, take payment, those kind of quote requests, and then you need to make sure that this is obviously established in a secure manner. And the last one is that you sometimes, if the distribution partner doesn't want to, or because of their regular regulatory status is not allowed to create the customer front end, because that they would be advising that the insurer provides a white label customer journey, some JS embed code, web app code, with that then kind of receives some data and then sends it back to the insurer.
So with the distribution partner, right? Like in this case, it could be the cell phone company,
for example. Yep.
Verizon, AT&T, whatever. Now you have the Assurian, in this case in Verizon, they have the Assurian insurance company that insures these. Is the insurance company, do they actually need the customer data? Because they only really need the data when there's a problem, I would assume. But they have the embedded insurance.
And that's so it depends a little bit on how the claims process is being done. So if the distribution partner it is also the ones who take on the claim, then the insurance company does not really need to know the personal details about. They just need to kind of it's called a bordereau. They just kind of need the bulk payment about policies and for blah, blah, blah. And they just kind of need enough information, accounting and financial information for to show what risks they have and to do their kind of regulatory filings and accounting stuff. If the insurer is and that is actually what a lot of insurance, travel insurance is not really about travel insurance. Travel insurance is about 24/7 assistance across the globe when shit breaks, when you're traveling, on figuring out how to pay a bill in a hospital across the world, or being, that's really the heavy lifting behind it. And so I think that's another misconception, that insurance is not just a financial product. You need to figure out these claims. You need to organize a claims adjuster, a handyman. You need to figure out, is that a viable invoice? So there's more to it, and there's a whole ecosystem behind that that insurers need to aggregate or orchestrate. But ultimately, if the insurance carrier organizes the claim, they need to know the customer information.
We actually have a question from our audience. So guys, feel free to submit questions. If you have questions on LinkedIn, YouTube, or Twitch, you'll be part of the show. If you have questions on Instagram, I'm just going to read it out. All right, from Kevin Lamb, one of my training partners. I saw him this morning, actually. We train, we try to choke each other out on a daily basis. So yeah. All right, so came in
Sounds
late.
Lovely.
Sorry. Yeah, no, it's absolutely exhilarating. I'm in jiu-jitsu. All right, so came in late. Sorry. When you refer to the customer journey, is this referring to the checkout phase of the purchase? Is it more complex than that?
I would say, and that's a very good question, I think it's both. So sure, the checkout phase is an important part of the customer journey, but as we've said, the customer journey in its entirety is from quote to buy, to potentially change your insurance product, to cancel your insurance product, how to pay, but then ultimately also how to submit a claim and how a claim can be regulated. Let me give you an example. In order to run a profitable mobile phone insurance program, usually insurers that do it well don't just pay out, right? Because everyone knows, the phone just broke once the new iPhone came out. Okay, and now I'm just going to get a down payment on my new iPhone. And so what they do is they do kind of replace like for like. So to deter you from, because that is not what the insurance was there. It's not a financing option for your gadget dreams. That's, because then the insurance would be more expensive for everyone else. But that could be a customer that is part of the customer journey, that you then just get a replacement phone, or that you only get a payout once you've proven that you've actually purchased a phone of similar quality. So I would say that's the entire customer journey that I would consider. However, don't try to delight your customer. It just doesn't. It's too tough. So focus on the sales part. I would recommend.
So interesting, right? When you said customer journey, I was looking at it from the perspective of the distribution partner, and looking at it from the perspective of, okay, I'm the end user customer. I go to this website, this app, or whatever. My concern is not insurance. My concern is whatever product that they're selling or service that they're providing. So now, in going through that service, I pay, because usually what happens is I pay for the service and then something else pops up. You paid for this product. Would you like a 2-year warranty on it? Would you like to insure it? Would you like, so when you said customer journey, that's what I thought about with embedded insurance, is like, okay.
That is the key part of that kind of sales part of the customer journey. But if there's different parts to experience. As we've said, most people luckily don't have to experience insurance, but there's more. I think you could also make a point about saying a customer journey is every touch point you have in the life cycle of potentially engaging with your insurance contract and thus the insurance provider to experience the product.
All right. Makes sense. Yeah. Makes sense. We have to take a brief moment just for a word from our sponsor. And then when we get back, I want to talk to you about AI and the impact in embedded insurance and where things are going.
Sure.
And I want to learn more about KASKO.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! Instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on Demand CISO to connect with an expert.
Are back. So I want to understand, right, with InsurTech and AI, obviously, everyone now AI has been a while for a long time, obviously, but became extremely popular once, in terms of more public consumption, public view, ChatGPT, large language models, and things like that. Where do you see things going in terms of embedded insurance with the mixture of AI? Like, what are your thoughts
Sure.
on that? Like, what's the outlook?
So I think, and I have to say, I'm not an expert on AI, not even an expert in AI and insurance, but what we've seen where AI or machine learning, the applications are really interesting if you want to kind of get non-traditional pricing. So what I think where AI can play an interesting role, because normally insurance pricing is kind of done on historical data, sometimes actuarial, but what the benefit that we might have from platforms is that you can generate more data points that could be relevant for pricing. Now, personally, I don't think necessarily, depending on the product, cyber again being an exemption, I don't, whether you have a bunch of other data points that are more deterministic and better in pricing than what you might have in your kind of claims-based models, I'm not so sure. But I think there's two elements that usually are missing in insurance pricing. One is willingness to pay, and it's a hot topic about regulation because especially in the United States, it's not so easy, but because you need to submit your rates. But in look at the United Kingdom about how price iterations on price comparison websites really go, and the second one is competitive prices. How does your product position to something else? And so that is really where I think AI models can kind of help in pricing, both in real time or on a more kind of structural review process. The rest, I'm not so bullish. Yeah, sure. I don't know whether AI helps you with OCR and that stuff. That stuff I think is probably super helpful because insurance companies deal with a lot of unstructured data and documents, etc. If AI helps you, train a better OCR or something, I think that's good. But personally, I think those are the two biggest applications right now. Not to say that there aren't more, but I would argue probably in the United States, 90% of insurance companies have less than 10, maybe have 20% of their customers' emails, would be my guess. Insurance companies don't have your email. They don't. They go through mail, etc. So they don't even have that. And I would say that's probably a better thing to focus on than AI on different things, because that's not how you normally deal with insurance. And some part has to do with regulation, because you need to post contracts by mail, because that is what some archaic regulatory says is that's how a contract comes to be. You can't just make a click on a life insurance policy, but many insurance companies don't even have their customers' email or cell phone number. And so that is, with the state of the industry being that, I would focus on that before I'll put a fancy AI lab somewhere. But that's just my 2 cents.
Interesting. Maybe for another time we dive deeper into that, because that sounds, sure. I'd like to learn more about that. I don't know if we have time. Also, what I want to get into your mission at KASKO. Is it pronounce your company?
KASKO,
correct?
Yeah,
KASKO.
Mm-hmm.
What's your mission there? What are you solving in terms of InsurTech and so forth?
So I think the main thing, and that is my co-founder and I started KASKO primarily with creating a workplace that we really liked working in. And for us, that's a place where we have, meaningful work, meaningful relationships, and fair compensation. That's ultimately why we did this. We wanted to do cool shit with people we liked, and ultimately be able to pay the bills and create a perpetuum mobile to continue doing cool shit with cool people. And, that was it. Now, obviously, we've been around it for 8 to 9 years, and I've probably given, if you look back on the record, different pitches about what that is that we're building, etc., and who I was. But at the end of the day, we never erred far from the core of it. I believe our mission is to help insurers or MGAs, brokers, to ultimately better serve their customers. That's really it. We believe in working with the industry. I don't think insurance is broken. I don't think it needs to be disrupted. I applaud anyone who manages that. I would not put my eggs into that basket. I think it's just much better to work with the industry. I'm also part of the industry. I was kind of have a family background in that. I'm not an outsider, if you like. Maybe that's a good thing. Maybe that's a bad thing. I don't know. So, and what we've coined there, we call it kind of InsurTech as a service, or as one of my former colleagues put it, we're like your startup. Because I believe if you could inject the entrepreneurial spirit, the right application of technology, no blockchain, no fancy programming language if it's not required, the right level of technology within the infrastructure, reach, and trust that an insurance company does, combined with an entrepreneurial spirit, I think, really cool things can happen. And we do that primarily through technology. We have a cool technology platform that allows people to run an embedded insurance program outside of the legacy infrastructure. That's our core services. We do some compliance stuff, getting people into Europe. And we also do some consulting. And ultimately, we feel very comfortable with that at the moment. And we're happy, being on the sidelines, helping other people score goals. It's fine for us.
It's awesome. I love it. Joining creating something that you also like, a place that you want to be. Like, that's your happy place. It's like, listen, we could all get different jobs and careers and different things, but how about we just create a place where we want to come to every day and try to do great stuff?
And that's it. Because that needs to be the ultimate goal. That is not to say that I want to do, and from that follows meaningful work, challenging, good problem. I would be bored doing the same thing every day. It needs to be challenging and achievable. That then attracts people who you can learn from, who can challenge you, who can get you further, who you then start to respect. And automatically, I find it important. I don't know. Have you ever met someone that you truly respected, that you didn't on some level also like? The other way works as well. I like people who I don't respect. But if I respect someone, it's very hard for me not to like them on some level. It's so, and then from that should automatically, of course, follow that, we need to be able to solve someone else's problem, that they give us resources so people can live their lives, can continue working here and don't need to go someplace else. Are you we think this needs to be financially rewarding for everyone involved. We also have investors, but we don't need to make every KASKO employee a millionaire. I'm okay if that doesn't happen, as long as people really like and can contribute and look back and say, it was cool working at KASKO. That was a good stint. Learn something.
Posed that question, I was going to get philosophical because I really had to think about it. And you know what? I think, have you met someone that you respected but didn't like on some level? You know what? I think I'm gonna take that with me.
Do that.
And I'm just gonna take that with me. I think that's gonna be an interesting conversation with some friends. So I really want to think about it. The beautiful thing about a live show is we shot it, produced some really good information that people could take away, and we're done. It's the evening time. Oh, can you tell people where you're located right now?
Sure, I'm located in Hamburg, Germany.
And what time is it right now in Germany?
So we're approaching 7 p.m.
And we're approaching 1 p.m. So you're going to get off your night. I'm going to get off my afternoon. So that's the beautiful thing about a live show. I'm not going to go back and edit it. I mean, we're going to probably make some clips in the future, repurpose the content. But, every once in a while you get that question and you're like, like you can't go back, think about it, and then come back with an answer. It's something that I really want to think about that. So I thank you for your time today.
Thank you so much for yours.
Giving our audience and giving me an insight on the insurance industry, especially on the embedded side that I didn't know. And also the one of the key things that I've learned, I mean, it was straightforward when you said it. When I said, was there anyone who totally disrupted the insurance? He was like, absolutely none, not one. And I was like, wow, not one. He was like, no, not one. You were so confident in that answer. And then, so it's interesting that because you hear about disruption all the time. You're like, oh,
I mean, don't get me wrong. There were companies that were built and that created value. Absolutely. Both for the shareholders, the employees, everyone involved in that enterprise. Absolutely. But that didn't disrupt the industry. It was just another insurance carrier, but there's none who truly disrupted the, hasn't been, I don't know, not even disrupting or even an industry defining moment. Stripe was industry defining for payment service. I don't think they disrupted payment service. There seems to be PSPs all over the place, but at least industry defining. I think they did set a gold standard. I don't know that any InsurTech that set a gold standard.
Okay, so if you think about it, like Apple with the App Store, total game changer. Game changer, right? So on that same note, right? Would you say that embedded insurance was a game changer in the industry? But what we're seeing now, I mean, like you said, we saw other signs of it, but the seamlessness of it now, like even going on Amazon, you try to buy something that's over $100. They're going to say,
No,
"Oh, you."
the short answer is no.
I love it. Okay.
Because it has been around the block before in less nimble aspects. I don't know when you're probably travel insurance within when you booked your travel is probably a 30-year-old. I don't know. I'm making this up. I don't know, but it's probably pretty old. So that's one thing. But the second thing is, and by the way, I am an absolute believer in embedded insurance. I think it's great. I think it's a great growth opportunity. I, again, also don't think it'll disrupt insurance, because the thing is, from Amazon warranty insurance to what am I going to do if I have two beautiful daughters, and like, what's going to happen to my family if I die? That's a stretch. Amazon's not going to go that mile. And so it's not going to disrupt and own that entire, what happens with my health and my life and my, they might not even get towards the car or my home. They're going to get partially there, and that's good. But they're not, I don't think they're going to encroach it without then kind of using tried and tested models of saying, okay, now we have a call center and they advise me on it. And, you have your friends at Amazon and it's just a cool insurance broker labeled by Amazon. Okay, great. That's not disruption by my definition. And so I think, and I think that's okay. I think hopefully high interest rates make all this kind of move fast and break stuff. Software's eating the world. Maybe we should focus on building solar panels. I think we have bigger fish to fry, quite frankly, than your next SaaS product. But maybe we're just kind of going into a more grown-up phase about what technology can do and where we should focus, and maybe that's okay.
You know what? No, real, really good conversation, man. You know what? And so Nick, so I think you're the first person in my 3 years of doing this show. This is 147th show. First person I've actually talked to about insurance. And if I'm missing somebody, I want to apologize right now. But I really like, like I like the same.
That's how I feel on Money 2020. InsurTech is like the stunted cousin of FinTech. That's why we have our own conferences. We feel more comfortable amongst ourselves.
That's funny. Are you going to be there?
I won't, unfortunately.
Okay. Yeah, no. So when different topics on insurance comes up, I'm gonna call on you and say, come back. I want to get your take on this. I want you to help me. I want you to help my audience understand it. So I definitely love meeting you, and great conversation, man.
Thank you so much. It was really fun. I hope I like talking about. Thank you so much for taking the time. I think it's a great topic, and anyone listening to this, or please reach out, have any questions, and thank you so much for listening.
So what I'm going to do for the last minute, I'm going to give you the stage to tell people how to find you, anything that you want people to learn about KASKO. So I'm going to come off the stage and give you that time.
Hey guys, so if you have any questions about embedded insurance or the wider insurance market in general, with a kind of stronger focus on Europe, feel free to reach out. Love to talk about this stuff. Love to share my 2 cents. Love to hear your view on it as well. You can reach me best on LinkedIn, quite frankly. Hopefully we'll link this here somewhere, but also via email. But yeah, LinkedIn is probably the best thing. And thanks. Looking forward to hearing from you.
All right, good stuff, guys. Thank you very much for tuning in. Really appreciate it. So for the audience, I'll be at Money 2020. I'm going to be doing some daily vlogging there, talking to some interesting people. We're going to have something called Tech Behind FinTech on the go, so TBF on the go. Looking forward to really interesting conversations. But like always, you'll see me here every Friday, 12 p.m. live. So we have interesting guests coming back. And you go on our website, drop in your email so you become part of our email list. This way you will not miss an episode. So all have a great weekend. Thanks for joining. To my people on LinkedIn, Facebook, YouTube, also my guys on Instagram. I'm waving to you all. Thank you for tuning in. Really appreciate it. On that note, we are out. Cheers.
Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.